A very good afternoon. We will wait for about 2 to 3 minutes, and we will start. Hi guys. So yesterday, my name is Shaz Farabi, and yesterday I had looked at some 4 important topics of the audit and assurance paper. Okay. Today, I'm practicing a few questions from the exam kit. This is one area which a lot of people have been asking for. Exam kit, exam kit, exam kit, exam kit. Everybody is panicked about the exam kit. Everybody wants some practice from the exam kit to be done, which I am going to cover in the remaining in 4 hours of marathon that we are doing today. All right, let's get started. Now, all these reminders are being sent in the marathon. So let's start. First and foremost, this is what we covered yesterday in yesterday's marathon. If you've attended it, great. If you have not attended it, we will also be uploading this on YouTube. But I mean, your exams are hardly 2 weeks away. So please make sure that you are watching all of these to ensure that your understanding improves. Subrana might not be able to hear me. Subrana, your audio thing is not activated. Anyway, let's just get started. This is my name. For those of you who don't know me, you've never attended my classes before, hi. And this is my name. You can search me up on LinkedIn. I am on LinkedIn by this name. You can send me a connection request. This is my contact number. If you want to reach out to me on WhatsApp. Okay, and today's date is the 18th of May 25. For those of you who don't know, we have had full audit and assurance classes, and we completed them on the 16th of May within 55 hours. So we completed audit and assurance in 55 hours. Normally, we take 60 hours. Normally, on average, it takes about 60 hours. We spent just 55 hours, but we went in detail and depths of everything. Now, today we're going to solve exam kit questions. So I am hoping and expecting that everybody who is attending this demo today, this marathon today, are people who are already familiar with the topics of audit and assurance, and we're only doing exam kit questions. The first question I'm going to do is Night Electronics, which is from your Kaplan kit, question number 201. And I'm not going to waste time on section A questions. I am going to do section B questions because that is where a lot of you lose marks. All right, now let's first and foremost understand one important thing. It is a little bit of, you could say, generic piece of information, but it's so important that I will still repeat it. Always when you open the question, look at the requirement first, not the information. You don't need to read this now. So the first step we're going to do is read the requirement. Step number 1, read the requirement. Okay, now let us read part A of the question. Briefly explain how each of the following sources of information will be used by Hercules and Co. to gain an understanding of Knight Electronics Co. at the planning stage of the audit. Prior year audited financial statements, current year budgets and management accounts, prior year report to management, board minutes, and company website. Now let us close the textbook. Sorry, let us close the kit. This is my way of teaching. Not sure if you like it or not, but this is how it is. I close the book. Close the book, right? What you are looking at is you are the auditor of FinChartered Academy. right? So that brings me to the institute which I run, FinChartered Academy, based out of Chennai, India. You are the auditor of FinChartered Academy. Auditor meaning example. Auditor means examiner, investigator. Okay, and you are asking me for prior year audited financial statements. Okay, prior year, that is the previous year's financial statements. Forget prior year financial statements. Let's start with the easiest, company website. You are asking me what is the website of FinChartered Academy. So I tell you www.finchartedacademy.com. Generally, as a student, forget auditor, but as a student, generally, why do you ask for the website? What information do you want to get out of the website? Website से क्या information हमको मिलेगी? I want all of you to do this right now. Go to the website. The information you will get is what? What are the products and services that we offer? Why did you go? You went to the website to get information about what products and services are we offering. Products, services. Similarly, when I don't know who is the auditor here, but I believe the client is Nightco and you are Hercules. So why is Hercules asking for the website of Nightco? Simple logic, because Hercules wants to understand the products and services of Nightco. Then that is why Hercules is asking for the products and services. Fine. Then comes what? I'm going backward. Board minute meeting. Board meeting minute. Board meeting minute matlab? Board meeting minutes. Minutes of meeting, yeah. I mean, MOM. This is basically a piece of paper in which everything that was discussed in the meeting is written. Okay. Why do you want this piece of information? Because you want to know if there were some important things that were discussed in the meeting, which you as the auditor must be aware of. I repeat, board meeting minute is basically minutes of meetings. Yani, everything discussed in the meeting is written down. Why do you want to see this? You want to see this if there were any important things discussed in the meeting which the auditor should be aware of, to gain knowledge about important matters related to the business, which were discussed in the meeting. I will give you an analogy. I will give you an example. One of my friends, what this person does is in the chat in WhatsApp, they're very busy. Okay. So what do? They open the WhatsApp, and in the office group, what do? You have this option to search, right? Search for any message, search for anything. So they open the group and they search their name. Why do they search their name? Because it will show in WhatsApp. It will filter and show, right, where all your name was taken. And then this person reads those messages first because they know that those messages will be more relevant to them. Something similar, but not exactly the case. You are reading the minutes to ensure and to get knowledge about anything that is relevant and important for you to know as an auditor. That is why you are obtaining this piece of information. Then, what about prior year's financial statements? Why do you want the previous year's financial statement? For example, suppose you are joining FinChartered Academy for your AA paper, Audit and Assurance paper. You are joining FinChartered Academy. Okay, I don't want to build a sense of panic. So I am sure all of you will pass Audit and Assurance. But for the sake of example, let me even change the subject. Suppose you are doing PM with FinChartered Academy and you already did it somewhere else, because all these people in this marathon, I don't think anybody I thought. None of my regular students are in this. Okay. So suppose you did PM somewhere else, you failed the exam, and then you came to me and you said, teach me PM. So I will ask you, how much did you score in your previous sitting? Why am I asking you this piece of information is so that I know what is your performance like. Previous period में performance कैसी थी? So when you look at prior year financial statements, you obtain information about performance, also about how did, for example, when I see your PM notes from your previous sitting, XYZ Institute, you did your PM from, I don't want to name anybody, but you did your PM from XYZ and you failed. I want to see your notes to see how did you study PM, as in what policies did you use to study PM. Similarly, when you are auditing financial statements, you want to take the previous year's financial statements to see what accounting policies were used. Right? And what was the outcome of the previous audit? Oh, you studied this. You studied, okay, PM में क्या होगा? PM में you have throughput, you have linear programming, you have pricing, you have this topics. You studied all that. You used all these policies to study. But what was the outcome? Oh God, 48 failed. So this is why similarly auditor will also try to obtain prior year financial statements. Right? Then what about, what other information are they giving? Prior year audited financial statements, current year budgets and management accounts. Why does the auditor want to look at the current year budgets? For what? See, this gives the auditor very important financial information for the year. Okay, this year we're expecting this much sale. This year we're expecting so much, we're expecting so much costs. So it gives the auditor important information about this year's, it's basically financial situation, basically the financial information. And lastly, the prior year's report to the management. See, as an auditor, who are you? You are an investigator. You are a detective, correct? See, last year, as a teacher, in your last attempt, what did your teacher tell you? I will see what report your teacher gave you in your last attempt. In your last attempt, your teacher told you, okay, Akbar, you need to answer the question specifically for the client. Don't give general answers. Your teacher gave you this report in the last attempt. Okay, Mohammad Rehan Khan, last year your teacher told, sorry, last sitting, your teacher told you, read the question first. So I am looking at what did your teacher tell you last time, because that will indicate to me your weaknesses last time. Where were your controls weak? Because obviously only accordingly your teacher would have told you this feedback. Similarly, as an auditor, when you read prior year's report to management, you obtain an understanding of the system of control, and if any deficiencies were mentioned. If these deficiencies are not addressed, if these deficiencies were not addressed, it means those deficiencies are still present, meaning the auditor must be very careful. Were not addressed, it means these deficiencies are still present, and therefore the auditor must be careful. For example, if I see in your last sitting, in your last attempt, your teacher told you, you need to answer the questions specifically to the client. Only then you will get the marks in audit and assurance. If you give generic procedures, if you give generic deficiencies, if you give generic audit risks, the marks will not be awarded to you. So I will see what report did your teacher give you last sitting. And if in this sitting also you have not resolved it, it means I must be careful with you. It means I must ensure that at least in this sitting, this problem is solved. So as an auditor, you need a lot of information. What information do you need? You are, as Hercules, you are Hercules, okay? As Hercules, you are taking the company website information, you are taking information from the board meetings. Basically, you are looking at the minutes of the meeting, you are looking at prior year financial statements, you are looking at current year budgets, and we are looking at prior year report to management. You are taking all of this information, but for taking all of this information, there is a reason, there is an objective behind why you are taking this information. And that is what part A of the question is asking. They're asking you why, how each of this information will be used by the auditor to obtain an understanding about the client. I hope this part of the question is easy. Now comes part B of the question, which is the part which, if you understood, then you will be able to answer all audit risk questions. I mentioned audit risk yesterday in yesterday's marathon. That's why I said in yesterday's marathon, I did only those things that are very commonly asked in the exam, especially section B topics. For example, yesterday I did procedures because a lot of questions are asked from procedures. One of the topics I touched upon yesterday was audit risk and business risk, because I know that a lot of topics are asked. I mean, a lot of questions are asked from audit risk, right? And you see the first question in Kaplan itself is asking you on audit risk. So we are questioning you on the audit risk. So let's get started. Look, guys, again, for those of you who were not here yesterday, I would really urge and request you to watch the video yesterday's marathon, which will be uploaded tomorrow. But for those of you who were there here yesterday in my class, I think Nitya was there, Akbar, I'm not sure. Ananya, I think, was there, Akhil was there, Cables was there, Mariam was there, Subarana was there, Varsha was there. So majority of them were there. So I don't want to get into the basics because yesterday I explained the logic. What is audit risk? What is business risk? Today we are diving straight into applying that to the exam kit question. So now the second thing you need to look at is whenever you solve an audit risk question, whenever you are asked audit risk, you need to ask yourself only one question. First of all, wear your shirt. Yesterday I told you about the shirt. And in your shirt, it needs to be written, I don't care. For example, here in this question, I saw somewhere just within 1 second, I saw it. Where is it? Somewhere just now, here. Prices of components have been steadily increasing over the past 2 years, leading to a reduction in the profit. As an auditor, I don't care. See, people say, oh, if the profit goes down, company will shut down, many people will lose their jobs. Remember, you are not their aunt. You will wear your I don't care shirt. And the only thing you will ask is, how is this event going to negatively, or how is this thing going to pose a threat to my, what is this? The ones who attended yesterday, whenever I draw this, what does it mean? How is this? What is this? Who can tell me? Let's see who has understood me now. What is this? Type. How is this thing going to affect my, very good Akhil, financial statements? Very good Sabrana, very good Cables. How is the fact that the gross profit dropping is going to affect the financial statements? What is the risk to the financial statements? That is the only thing that we are worried about. Therefore, let's get started in reading the information and we will see our audit risks there. Let's read line by line. It is 1st of July 2005. I wish I can go back to that time. But let's assume it's 1st of July 2025. Your firm, Hercules & Co., has recently won the audit of a new client, Knight Electronics. Very good, Mariam. Remember, guys, this client, Knight Electronics, is, so again, see, whenever I highlight a sentence, think about this. How is this going to pose a threat to the trueness and fairness of the financial statements? True and fair. How is this underlined sentence going to affect the trueness and fairness of the financial statements? Remember that this client, Knight, is a new client. If it is a new client, it means I am, as an auditor, new to this client, meaning I don't know much about the client. I don't know much about the accounting policies of the client. Right? So the first problem is this client is a new client. Opening balance may be misstated. You are right. Who said this? Harsh. Absolutely right. Right? So here, what are you going to look at? Again, new client. New client meaning what? How will it affect the financial statements? It will affect the financial statements such that, again, he will have his financial statements, but because he is new for me, I don't understand. I am not very familiar with the accounting policies, with the transactions that have happened. For me, it is new. And because for the auditor, it is new, the chances of me being to spot a fraud or error, the danger that I will not spot a fraud or error increases. I will explain this to you with the help of an example and analogy. And the example or analogy is what? What example can I give you? I am going to make biryani. And nobody knows how to make biryani. You people don't know. You are new. Sorry? You are new to make biryani. You are new to, guys, keep yourself on mute unless you want to speak with me. You are new to making biryani, right? Now, because you are new, if I tell you, okay, we take, what do we take? Tomato. We take what? We take onion. We take what? We put it in the thing. Then what do? We put salt. We put whatever we put rice. Okay. You let it sit for some time. So I don't know how to make this. But all this is written. Now, because you are new, you will not be able to detect if anything is wrong. For example, if you don't know how to make this dish, you are not able to detect if there is a problem because you are new to it. Similarly, whenever a client is new, the auditor is not familiar with their transactions, their ways of doing things, basically their accounting policies. Okay, so whenever there is a new client, that itself is a risk. So the first audit risk is what? The first audit risk is the fact that the client is a new client. So what will you say? You will say Nightco is a new client. Don't be generic. By actually mentioning the client's name, that itself shows that you are linking your knowledge to your specific client. He is a new client for us. Who are we? For Hercules. Hence, the audit team may not be familiar with their way, Knight's accounting policies, transactions, and balances. Therefore, the chances of a detection risk are high. Increased detection risk. Yesterday, I mentioned what is detection risk. Detection risk is the danger that we as auditors are unable to detect fraud or error. Because of our newness, there is an increased chance of detection risk. Rather, increased detection risk. Okay. Now, this is the first audit risk. Now, remember, for every audit risk, you will also give a response. You will also respond to each risk. There is a risk, so what do? I get funny answers. Okay, I get answers like funny answer. I get answers like only take work from clients who the auditor knows. I literally get answers like this 1 or 2 weeks before the exam. Please, guys, you need to understand that maintain professional skepticism. Yes, Mariam, you are right. Because there is an increased detection case, what the auditor will do, what should the auditor do? First and foremost, yes, you can keep an increased, you need to be professionally skeptical. However, on the other hand, what the auditor will do as an auditor's response is, as the audit firm, which is Hercules, should make sure that we have a suitable audit team. For example, if the client says, experienced audit team, Mariam, you're right. For example, if the client says that, oh, we are a not-for-profit organization, so you send those auditors who have experience auditing NFPs. So for example, in this question, if they mentioned that, yes, Sabrana, you are right. Sabrana, you are right. Sufficient time also needs to be given. But first point is first, you need to ensure that we give the right experienced audit team. Relevant people are sent to go and do the audit. Again, for example, if the question said that NITHO is an NFP, we will say that we will send suitably qualified, suitably experienced people. That is, we can say we will send those auditors who have experience in NFPs. But here there is no mention of that. So we will say that we will send a suitably qualified and experienced audit team to handle this case. As Subrana mentioned, because there is a chance that you might not be able to detect fraud or error, you need to spend more time in the planning of the audit itself. So enough time should be allocated for the planning and for the team to understand the company and the risks. Right? So this is how you respond to the audit risk. Similarly, there is a danger that the opening balances may not be right. Because see, last year we did not do the audit. So I cannot rely very confidently on last year's balances. That is this year's opening balance. So that is the other audit risk. Since this client is a new client, the closing balance of last year becomes the opening balance of this year. However, because we haven't done it, there is an increased risk that the opening balances may have or may not be reliable. So since this is a new client, there is less confidence about the opening balances, as we did not perform the audit last year. Now again, please don't assume that these are two audit risks. This is the first audit risk. Don't put this as two different points. This is one audit risk. Right? Now, again, what will happen? Because you know that there is an increased danger about previous year's balance, that is this year's opening balance, what you will do is you will do thorough procedures over opening balances. Thorough procedures over opening balances will be required. Why will it be required? Because we did not do it. Therefore, in order for us to be sure that they are correct and reliable, we will need to do thorough procedures over the opening balances. This is the first audit risk. So guys, what I suggest is, when you spot an audit risk, right? Read the question. Don't worry about framing the answers first. Your first worry would be to spot the audit risk, right? So the first audit risk is what? The first audit risk is there is what? First audit risk is that this is a new client. Let me underline. For the new client, I have also worded it, but my tips would be that you will need, just make sure you are able to spot the audit risks. Then let's read further. Nightco, for the year ending 30 September, Nightco sells products enabling smart building systems which allow customers to efficiently control their security. So don't worry, that will not have any negative effect on the financial statements, trueness and fairness. The audit manager held a preliminary meeting with the finance director and has provided you with the following notes. So let's read the notes. Since its launch 5 years ago, Nightco has experienced high level of growth such that the founder and CEO, William Knight, is considering a stock exchange listing next year. Now again, there is a danger. Every time you read a sentence, see if there is a danger to the financial statements. It's like you're playing chess. You want to, by all means, safeguard the king. Otherwise, your game is over, correct? So in this game, your financial statements is the king. You need to make sure that there is no check. You know how you play chess? There is a check to the king. And you need to avoid any check to the king. So literally, audit risk is like playing a game of chess. You need to see if there is any check to the king. And I hope not a checkmate to the king. See if there is any direct danger to the financial statements, to the trueness and fairness of the financial statements. So when you play chess, it will not be obvious, right? It will, your opponent will not say, yes, yes, I'm going to kill your king. You have to see carefully. Do you think this issue will give any check to the financial statements, to your king? I'm drawing a crown because your financial statements is the king here. There is a danger, guys. Yes. Very good, Akbar. There is a danger that because Mr. William Knight wants to go for a stock exchange, he has all the reasons to manipulate the financial statements just to make the financial statements look better. He has the reason to manipulate the financial statements, and that is the audit risk, the second audit risk, which I want to introduce to you. So I'll mention how do you mention the audit risk. First thing, copy paste the question, copy paste the information. For example, audit risk number 2 is what? Don't directly say auditor will manipulate the financial statement. Take some information from the information. You will say the founder and CEO, William Knight, is considering a stock exchange listing next year. Copy paste that. Guys, I'm teaching as if I'm teaching beginners. Please follow, please listen carefully. The founder and CEO, William Knight, this is how you will get full marks. Don't directly jump and say founder and CEO will manipulate the financial statements. You have to have an opening sentence. The founder and CEO, William Knight, is considering a stock exchange listing next year. If you stop your answer here, believe me, be very confident that we all will fail. Because this is not the audit risk. This is only the opening sentence. After this, you will mention the actual audit risk. There is a danger, there is a risk that the CEO will try to play with the numbers in the financial statements, basically manipulate the financial statements to make the financial statements look a certain way, so that they get their, they're going for a stock exchange, right? So that they get maybe a better price. So there is a danger. Again, you will say manipulate the financial statements. So you will have to say, like you're playing a game of chess, you will have to say there is a danger that the revenues could be purposely overstated. Profits could be purposely overstated. Assets could be purposely overstated. And that is the audit risk. There's a risk that the revenue could be overstated, profits could be overstated, and what else? Assets are overstated. So this is the audit risk number 2. So here I'm telling you how to frame the answer, because all of you are able to spot the audit risk. But how do you put the answer? First, put the opening sentence. Once you put the opening sentence, say what is the danger and how exactly will it affect the financial statements. For example, even in audit risk 1, I said what? I copy pasted the first sentence from the question. Knightco is a new client for Hercules. The second point is, because that we are a new client, what is the danger? There is a danger that we don't know the accounting policies, transactions, and balances. And because of that, in the financial statements, there could be an increased detection risk. So break your risk into 3 parts: the opening sentence, the problem, and how exactly will that problem affect the financial statements. Okay. Now, again, we have to give our auditor's response to this. All right. So what will the response be? So the risk is in red, auditor's response is in green. How will the auditor respond to this risk? Think about it. Again, the auditor must be very careful. Professional skepticism. The auditor knows here what is the problem. There is an increased motivation for fraud. So the thing that you have to do is ensure that there is a suitably qualified and experienced team. And we need people who are extremely, I cannot send naive people. Naive means very innocent people to do this audit. Why? Because there is a high chance, high danger that the directors are doing some fraud. They have reasons to do it. Again, I'm not saying that they are bad people, but as an auditor, I must ensure that I have professional skepticism. So the audit team should be professionally skeptical, should maintain professional skepticism, and be alert for any fraud that can possibly happen. You need to be very, very alert because you know that there's a danger. There is a reason the directors have to do fraud. And again, we need to be very careful about decisions, judgments made by the directors, because remember, directors have a reason to make judgments that will make the financial statements look better. So we need to review judgmental decisions and see the reasonableness and how reasonable are those decisions, because again, the director and the CEO William Knight has reasons to try to manipulate the financial statements, play with the financial statements. All right, now I will go on and I will spot some more audit risks, and we will, with the help of what I have taught you, look at how we word these risks. Your second risk is what? William Knight is considering a stock exchange listing. Let's look at the third risk. Knight Electronics Co. has both corporate and domestic customers. Again, it will not directly have a negative effect or risk on the financial statements. Remember, your financial statements is the king. See if that sentence will give any check to the king. No, it's not giving any check. On 1st of October 2024, Knightco began to offer customers the option to purchase a 3-year servicing agreement. That also will not directly have any check to our king. Our king is the financial statements. What else? I don't think that'll affect the financials. That'll give any risk to the financial statements. The 3-year service for products. Okay, that also I don't think. Customers pay for the service agreement in full at the start of the year. That also is easy. It will not cause any direct risk to the financial statements. Component parts are purchased from a number of suppliers. That also shouldn't be affecting the financial statements, shouldn't be giving any risk to the financial statements, because even if I have 10 suppliers, so what? However, for the auditor, the risk is price of components have been steadily increasing over the past 2 years. I highlighted this before also, leading to a reduction in the gross profit margin. So there is a danger that gross profit could be overstated. Prices of components have been steadily increasing, leading to a reduction in the gross profit margin. The forecast financial statements show inventory valued at cost. This is a risk. Again, I hate, but again, as a tutor, I just don't like to leave anything. And then let me answer this. What is the risk here? Again, the first opening sentence is what? Prices of components been steadily increasing. So obviously, if the prices are increasing, prices of parts are increasing. there is a drop in the gross profit. Write the entire sentence. Has been steadily increasing over the past 2 years, leading to a reduction in the gross profit, and the inventory is valued at cost. Now you've mentioned this, correct? You've mentioned the sentence, but you now need to highlight what is the problem. What is the problem? The problem is this. See, inventory, you would have learnt in FA and you would have learnt in FR as well. Inventory is valued at the lower of cost and net realizable value, which is the same as selling price minus cost to sell. See, remember, I repeat, inventory is normally valued at whichever is lower, cost or NRV. So suppose I sell a pen, okay, and the cost of the pen is 2 rupees, and I sell the pen, the NRV is 5 rupees. Inventory is valued at whichever is lower. Which is lower here? The cost is lower, so I value the inventory at the cost. But in this case, what is happening? Price of the parts of the pen are becoming more and more expensive, and because of that, there is a reduction in the profit. What do I mean by that? See, if the inventory is becoming more and more expensive, that is, instead of 2 rupees, it becomes 4 rupees, and NRV is 5. So profit will be 1 rupee only. Instead of 4 rupees, the cost becomes 6 rupees, NRV is 5. So profits are declining and will become a loss of 2. Sorry, a loss of 1. Why? Because cost of the pen is 6, NRV is 5. So it's a loss of 1. And that is exactly what is happening here. The costs are increasing, because of which profits are decreasing. But inventory is still valued at cost. What did I tell you when I started this? Inventory, I mean, your FA teacher must have taught you this, your FR teacher also must have taught you this. Inventory is valued at lower of cost and NRV. But look at this problem. Cost is increasing, because of which gross profit is going down. Cost is increasing, because of which profit is going down. But inventory is still valued at cost. Maybe NRV is lower. And if NRV is lower, inventory should actually be valued at NRV. And if inventory is not valued at NRV, it means you've made a mistake. Are you understand? So the problem is you've copy pasted the sentence from the question. But the problem is what? There is a possibility that NRV of the parts is lower than the cost of the parts. If that is the case, that is the problem. And how will that affect the financial statements? Inventory will be, there's a danger that inventory will be misstated. Are you understanding? So you call the question, say what the problem is, and then mention how will that problem affect the financial statements. This is what will get you full marks, good marks. We all are able to spot audit risk. By now, at this stage, if you are not able to spot audit risk, I am worried for you. Don't be proud, don't be happy if you're able to spot the audit risk. You should be able to disconnect. I hope you were there when I was talking and saying, sorry, I hope I was there when I was talking and saying that when you mention audit risk, everybody is in a position here. I'm sure in this class, everyone can mention the audit risk. But the key is to mention the audit risk that in a way it impresses the examiner. For example, even in the first audit risk, I mentioned the opening sentence. Don't directly say, oh, because we are new, there is an increased detection risk. No. You need to elaborate.
It's 5 o'clock.
Mention the opening sentence. Okay. Again, here what is happening? Nightco is a new client for Hercules. You've put the opening sentence. Then you said what the problem is. Then you said exactly in the financial statements what will happen. Right? So this is how you give the right answer, good answer. The risk is the okay, Ayokanmi, you are saying that the risk is the overstatement. Yes, the risk is the overstatement. The risk is the risk is that in the inventory may be overstated, misstated. But the way you put it is you put it this way, that is what will get you full marks. Now, after this, I will again, in this case, put the response, auditor's response to this case. What will the auditor's response be? The response is to check the audit team must ensure that the cost is below the NRV. Not must ensure, but must check. If the cost is below the NRV. How? They can select a sample of inventory items. They take a sample of inventory items and compare the cost with the sales price. To confirm the NRV is above the cost. Because if the NRV is below the cost, then the inventory has to be valued at the NRV. Inventory is valued at whichever is lower, cost and NRV. Normally, it is cost which is lower. So you are checking a sample of invoices, so a sample of items of inventory, and you are checking if the cost is below the NRV. If not, then we will need to ensure that this correction is made. Let's spot a few more deficiencies, a few more audit risks. In June, Nightco decided to revalue its premises, which had previously been accounted using the historical cost model. Okay. Properties with a carrying amount under the cost model of 3.8 were revalued to 8.4 based on a valuation performed by the management. Again, there is a problem here. See, whenever, again, revaluation is something you learn in FR. Right? Now that I have briefed you on how to answer, how to give points for audit risks, what I will do, because this is a marathon, is I will highlight a few audit risks. This would be one opening sentence. One audit risk. Similarly, in May 2025, what happened? The equipment used by Night Core resulted in a small fire at its premises. Okay. Think about it. There is a fire. The company has commenced legal action against the supplier of the equipment. There was a defective equipment. So defective equipment leading to a fire. What could the problem be? How could damaged inventory? Damaged inventory means overstated, overvalued. Yes. During the year, credit controller was ill and was, oh my God. This is always a danger. During the year, credit controller was ill and was absent from work for 4 months. Due to staff shortages, no replacement credit controller was appointed. So think about it. There is nobody to follow up on the credit control. So there is a danger that receivables could be overstated. See, for 4 months, that is 120 days, nobody chased for customers to pay the amount. Okay, who is this? Mariam, segregation of duties should be appointed. You're talking about a control in place. But what is the audit risk is the question. Please don't divert and digress. The audit risk is the fact that because the credit, so your opening sentence will be credit controller was ill. You can, in fact, if you feel comfortable, you can write everything. Due to shortage of staff, no credit controller was appointed. Therefore, there is a danger that there was no follow-up of the receivables. Nobody tried to recover the receivables. That is your second sentence. And because nobody tried to recover the receivables, many receivables could have become bad debts. And the danger to the financial statement is that the receivables will be overstated. So guys, this is how you spot audit risks, and this is how you respond. The auditor responds to audit risks. So again, remember, again, for the last time, I will put this also so that you know how to give the right answer, because I'm sure all of you are able to spot risks, but you don't know how to write it down, which is the most common problem I have seen before exams. People know what is the audit risk, but they don't know how to frame it. So during the year, the company's credit controller was away from work for 4 months and there was no replacement. That is the first opening sentence you will put. Right? Because of this, you need to mention what is the problem. The problem is what? The problem is that there was nobody to collect the receivables. There was an increased risk with respect to the recoverability of the receivables, meaning nobody was there to follow up, nobody was there to recover the receivables. Because of this, the danger is that the receivables will be overstated. Could be overstated. This is the audit risk. So as I said, you have to put your answer. If you want a good answer and if you want full marks, you need to ensure that you put the opening sentence, say what the problem is, and then mention how will it affect the financial statements. I've done that in all the audit risks which I have written. This is what will get you full marks, good marks. If you just know the audit risk and you don't know how to impress the examiner, you will fail. I'm confident. Right? Now, how do you respond to this risk? Also, there's one more thing. The receivables collection period has increased from 45 days to 75 days. That also indicates what? We're taking more time to collect our receivables. Again, recoverability of receivables. So you can mention that in the first sentence itself. Have increased from 45 days to how many days? To 75 days. Now, what will the auditor's response to this be? Think about it. See, you need to see with respect to receivables, you need to ensure that the controls are tested with respect to identifying irrecoverable debts. So review the controls about how the finance director identifies old and potentially bad debts. See if those controls make sense. And after the year, look at what cash you have received and review the aged receivables to assess how much has been received and how much is still to be received to ensure that we are making sure that the receivables are not overstated. Basically, to ensure and to assess valuation. Right? So I hope with question number 201, part B, we have gotten a fair sense of how to answer, how to spot audit risk. I gave you the tip. Assume you are playing a game of chess. Each sentence you have to see if it gives a check to your king. Your king is the financial statements. That is how you spot the auditors. But then when you communicate it to the examiner, you communicate it this way. You put the opening sentence, put what the problem is, and then mention how will that problem affect the financial statements. So how to spot the audit risk? See the sentence and see how does that sentence, how does that thing give a check, give a problem, give a threat to the financial statements. Once you have spotted the risk, then what you will do is you will answer or put the risk in this way with these 3 sentences. And you need not put it in sentences. You can continue as a paragraph, but ensure that your answer has these 3 elements involved. Knightco is a new client for Hercules. The audit team may not be familiar with Knight's accounting policies, transactions, and balance, because of which our newness there is because of our newness, there is an increased detection risk. Now you read this answer, you yourself will be surprised by the answer you have given. It will exactly match the examiner's expectation. Again, you don't need to put it in points. I've just put it in points for you to understand. Remove the points and then read it. You will love your answers. What is the second audit risk? The founder and CEO, William Knight, is considering a stock exchange listing next year. There is a risk that the CEO will try to manipulate the financial statements to make the financial statements look a certain way. Therefore, there's a risk that the revenue could be overstated, profits and assets could be overvalued. You see, you will enjoy reading your own answer. So you put it in points right? The first point is the opening sentence. The second point is what the problem is. And the third point is how will it affect the financial statements? Now you just erase the points. And it will give you a powerful answer, which you never thought you can give. Prices of components have steadily increased over the past 2 years, leading to a reduction in the gross profit, and the inventory is valued at cost. There is a possibility that the NRV of the parts is lower than the cost of the parts. Therefore, there is a danger that inventory will be misstated, overstated. Similarly, again, remove the points now. You've given such a lengthy, good answer with such nice words. During the year, the company credit controller was away from 4 months and there was no replacement. Receivables have increased from 45 days to 75 days. This you literally took from the information itself. There was an increased risk with respect to the recoverability of the receivables. Therefore, the receivables could be overstated. You see, now you look at these answers and then you look at your answer in the book. It will more or less be the same and you will get marks. These are answers. This is how you put award winning or mark awarding answers. Right? So I hope I have given you tips. Now, again, in this marathon session or in any marathon session, it's not possible for me to do all the points, all the questions. We're not doing the AA full batch here. The objective of this second session of the marathon is simply to give you some tips and tricks as to how to impress the examiner. There are a few more risks in this information which you should be able to spot on your own now. But what did I tell you? I gave you tips on how to spot the risk. See if that sentence you are reading gives a direct checkmate to the financial statements. If yes, then that is a risk. Then when you write down the risk, have an opening sentence. Second, you put what the problem is. And third, you put how will that problem affect the financial statements. Then you remove the 3 points and make it as one answer. And you will see that that answer will be a powerful answer. All right. Then we have procedures with respect to NITCO's revenue. Remember, I told you yesterday, that's why yesterday. So guys, when I teach you something in a certain way, when I do something, it is from my own professional judgment. Yesterday, I didn't do ethics because section B, the big marks, whatever are going to fetch you the big marks, because of the shortage of time, I spent those things in the marathon yesterday. And yesterday, when I did my marathon, I also elaborated on procedures and how to write a good answer on procedures. What to do, from where to check it, and I told you 3 points. What does it confirm? Okay, so can we look at ratio related risks? Mariam, we will look at. Right? Now, let us look at part C, which talks about substantive procedures for revenue. And yesterday, I literally did revenue. How do we do this? First of all, what are the sources of evidence of revenue? Where will you get confirmation that revenue, from where will you get proof about revenue? I mentioned this yesterday. Those of you who were not here with me yesterday, maybe Of course, you've done your entire AA, so I'm sure you should be able to do this. But those of you who were here yesterday, I mentioned sources of proof or evidence for revenue. One could be sales invoices. One could be goods dispatched notes. We looked at a few sources of evidence, right? However, I don't want to do that now because I want to directly get to looking at the procedures that we can do. Remember, revenue is a transaction. Correct? And for things like revenue, especially for these transactions, one easy way of getting marks is to do analytical procedures. I mentioned this yesterday as well. See, you don't need to look at the invoices, you don't need to look at the bills, you don't need to look at and see if the invoices are entered correctly, you don't need to see if it is recorded properly. No need. One way to get easy marks whenever there are these numbers, transactions, is to do analytical procedures. Compare this year's revenue with last year's revenue. That would be your easy marks when it's revenue, when it's purchases, whenever there are transactions, whenever there are numbers. Right? So easy marks, easy marks is what? Compare this year's revenue with prior periods. Okay, so again, as I said, your answer also needs to be in 3 parts. I mentioned this. Whoever was not there in my class, in my marathon yesterday, please listen carefully. Whenever you give an answer on procedures, you need to state what to be looked at, what is the procedure, from where will you take it, source, what is the source, and what does that procedure confirm? For example, what will you do? You will compare this year's revenue with prior periods. Okay. So you make a comparison of this year's revenue. Source would be prior periods. With prior periods to assess. Now, this is red. What to be done? Blue is basically the source. What are you comparing it with? And green is what does it confirm? It confirms. Why do you check this? To see if there are any significant fluctuations. You have to investigate significant fluctuations. I mentioned this yesterday. You see, to do what? What does it confirm? From that part onwards, I'm putting in green. Because even over here, your answer has to include 3 elements. What to do, what is the source, and what does it confirm? Here, it confirms if everything is as expected. For example, if your revenue last year was 20,000 and this year it's 4 crores, this is a very big fluctuation and there is definitely something wrong. For example, with respect to NITCO, there is a danger that this year we might expect to see higher revenues because there is a danger that Mr. Knight might play with the numbers. Where is he? What is his name? Mr. William Knight has all the reason to overstate the revenues. right? Therefore, you need to mention why are you doing this? You are seeing if there are any significant fluctuations, especially for night company, where there is a danger of increased or manipulation of revenue. So you can give extra points to yourself and impress the examiner by mentioning things relevant to the client. But these three things are definitely mandatory if you want marks. Otherwise, forget it. Another analytical procedure you will do is compare the actual revenue with the budgeted revenue to see if there are any significant fluctuations. Investigate significant fluctuations. So analytical procedures, whenever you are asked to do procedures for revenue, you are asked to do procedures for transactions, especially analytical procedures is easiest marks which you should not skip. So forget going to other procedures. You can always start with analytical procedures. It's easy marks. Don't leave these marks. See, you've put two procedures now to impress the examiner. And what did you need? All you needed was to know that, okay, this is a revenue and I can easily do analytical procedures on this. That much knowledge itself has given you two procedures in your answer sheet. Similarly, when you're asked to do procedures for purchases also, you can start off with analytical procedures, easy marks. Right? Again, compare the gross profit for night electronics. Again, please don't give random answers. Ensure that you from time to time link the answer to the client. And compare this to prior periods and investigate significant fluctuations. Again, an easy mark question. Easy marks, easy peasy. You've put three procedures. Now, the minute you put three procedures, automatically in the exam, your confidence goes up. So start with whatever is easiest and most obvious. Don't waste time. A lot of times people fail audit and assurance not because they don't know the concept, not because they don't know how to answer, but because they wasted a lot of their time. A lot of students, see, I've taught thousands of students so far. I have like 8 years of experience, and every sitting, believe me, every sitting, I am not joking. Every single sitting, I have at least that one candidate who comes back to me and tells me, I did not get time to answer the entire bit. Start with what you know. Analytical procedures is the best start. Right? Now, what other procedures can you do? Now we will look at some other procedures. I did this procedure yesterday, right? And the procedure is what? Very good, Mariam. I mentioned this yesterday. Compare customer orders. See if those customer orders have corresponding goods dispatch note and sales invoices, and see if those invoices have been correctly entered. You understand? So in this case, what do? You mention again, Mariam, compare customer order to dispatch note and sales invoices. Do you believe, Mariam, you will get good marks by saying this? Compare customer order to dispatched notes and sales invoices. Will you get marks? Yes, you will get marks, but will you get full marks? How will you reframe? What is missing from here? One important thing in your point is missing, Mariam. The important part, see, this is why Mariam was so fast in giving her answer, but very slow in telling me what is missing. Yes, Subarana. Very good. You need to mention what does it confirm. Mariam, okay, for those of you who don't know, for those of you who have no idea, okay, what is this? See, for example, Suresh came to me and gave an order. First thing I want to see is track. The order is there, but did we for the order, did we fulfill the order? Do we have dispatch notes? And do we have supporting sales invoices? For example, Suresh came and gave me order for 1 chicken or cheeseburger. I'm accommodating the wants of both non-veg and veg students. So Suresh came and gave me an order for 1 chicken cheeseburger. For that order, there has to be a dispatch note. Because if there is no dispatch note, it means that, okay, do we have a sales invoice? If there is no sales invoice, then it means that we don't have a sales invoice. And if there is no sales invoice, it must not have been included in our sales listing. Obviously, if there is no invoice, you would have not entered this sale. You would have not entered this transaction. And if it is not there in the sales listing and revenue general ledger, it means that your sales, your revenue hasn't been completely recorded. You understand? So what will you do? Select a sample of customer orders and agree these to, now in my case, guys, because I've been teaching from all these years, for me, it comes like natural. Like my wordings, it comes very like, because I've been doing this, like imagine you do audit and assurance 4 times every year for 8 years. Automatically, the wordings will come. Right? But for you, you have to use these steps to form your words. Select a sample of customer orders and agree these to the dispatch notes and sales invoices. Through to inclusion, is this included in the sales listing and revenue general ledger? Why? Because you want to ensure all of your sales, all of your revenue has been recorded completely to ensure completeness. So you see my answer, it's in 3 parts. The first part is what to do. Then what did I say? I said, what is the source? As in, from where are you comparing this? Where are you checking this at? You are checking this, you are seeing if it is included in the sales listing and the general, in the revenue general ledger. Why? Because you want to ensure that all of your revenue has been completely recorded. So your answer needs to include all these 3 points, guys. I hope this is clear. So you can copy paste this procedure there. Copy. That's it. You have 4 procedures ready already. What else can you do? Think about it. Whenever you sell, I mentioned this yesterday, you can, if there are any discounts, especially in the case of discounts. For example, if the client says that we have given a discount, have we given any discount here? No, but whenever you sell something on a discount, now again, my points and procedures are coming randomly because I've done so many questions. But whenever, suppose the client says that there is a discount, you can add a procedure and say recalculate the discounts. Why? To confirm accuracy. Recalculate the GST, for example, to confirm accuracy of calculations. But here there is no mention of discount, so maybe we can ignore it. Right? Any other specific mention of a sales related information? Select a sample of sales from the sales listing and agree back to the sales invoice to confirm occurrence. Okay. I've very good Ayok on me. Now, one more procedure that I am able to see is, you see, in this case, whenever we are selling, we as in our client is selling, the option to purchase a 3-year service, but you are paying them today. They are, sorry, your customers are paying Night Electronics today. So you see, this is a very good point to impress the examiner, where you will show the examiner that you are not some student who has just mugged up the procedures and you are spitting it on the paper. No, you have the capacity and the capability to specifically do procedures for the client. What do I mean by specifically do procedures for the client? What I mean by this is, see, when it comes to this specific client, the contract is 3 years contract, correct? However, they are paying you everything upfront. You understand? You see here, the entire payment, pay the service agreement in full at the start of the agreement. So this is a very important and a useful point that will get you more, that will make you impress the examiner. What do I mean by impress the examiner? For a sample of service agreements, you need to recalculate the split of revenue recognized in the year and that recognized as deferred income Why deferred income? Because remember, it is a 3-year contract, out of which for all the 3 years, the customer is paying in the first year itself. So you need to be careful about this. You need to make sure that the revenue is properly recognized for this year, and the remaining revenue is actually a revenue for the second and the third year. So that split needs to be correct. So you will impress the examiner by relating your procedure to specifically the client. You understand? Here you can definitely add a word or two and say, for a sample of service agreements, recalculate the split of revenue recognized in the year, and that is recognized as deferred income as, again, make a mention of the client as night electricals or night electronics. You can copy paste this sentence. Gets into a 3-year service agreement where the customers pay for the full service at the start of the agreement. As night electronics gets into a 3-year service agreement with its customers, with the customer paying for the service agreement in full at the start of the agreement. So here, this much part is new. Normally what I do, red, blue, green. But I have added black part also. Why have I added black part? I have added black part wherever possible. You should link your answer to the client, which will definitely impress the examiner. The examiner will know that you know which procedure is relevant to which client. You are not somebody who has just mugged up by-hearted all the procedures and you are just writing. You understand? You are not somebody who has just by-hearted. For example, I'll give you a small example. I'm moving away from the question a little bit. But generally from what I get answers, right, from a lot of students. And if suppose they're asked to do a procedure for inventory, I gave this example even yesterday. One of the procedure they will say is, they will say, basically what they will say is, you have to check the inventory that is held at third-party warehouses. This they will give as a procedure. Okay, blah, 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 to confirm it is existing, all that. I'm not mentioning it as a full-on answer, but they'll do this procedure. And this procedure is valid. It's not wrong. But you know what disaster they will make? The client doesn't even have inventory at the third party's warehouse. So this is what happens. You might by heart procedures, and when you go and put in the exam, that is when you fail. See if the client has any inventory in the third party's warehouse. If your client does not have any inventory in the third party's warehouse, which warehouse are you going to and checking? You are creating an imaginary warehouse and going there. So please make sure, this is what I mean. You need to link your answer specific to your client. That will get you marks. That will impress the examiner. Remember, for sure, whenever you do procedures, make sure you don't have any procedure that is not relevant to the client. And make sure whenever you do procedures, try your best to connect. See here, this is easy marks. It's telling you that when we sell to customers means what? Revenue. So you can, when you do procedures for revenue, you can include this. So this point in black that I have added is something that you will use to impress the examiner. To confirm that this has been recognized in line with the performance obligations in the fund. So again, remember, the first three things you will not leave. You see, it's a powerful answer, right? I saw one more thing with respect to revenue that we can do a procedure in this question. Okay. So again, guys, when you give your answers, when you give your procedures, ensure that your procedures will impress the examiner. Again, you need to say what needs to be done. You need to say the source. You need to ensure that you mention why are you doing that procedure? What does that procedure check and confirm? Does it confirm completeness? Does it confirm existence? Now, again, with respect to a transaction, there is no existence. Anyway, I don't want to confuse you, but when you give your procedures, you will impress the examiner in two ways. First, ensure that all the three elements of the procedure are there. What is to be done? What is the source? And why you are doing it? What does it confirm? These three elements need to be there in every procedure. That will get you marks. Second, wherever possible, ensure that you are linking your answer to specifically the client. Otherwise, you will not impress the examiner. So if you want good marks, you should definitely do this, right? And ensure that you don't put procedures that are not relevant to the client. All right. So I have spent a good amount of time on night electronics. Now I'm just going to randomly be picking questions to ensure that you are able to do, but I hope the tips and tricks that I gave you here were helpful. Out of that, part A of the question was it wasn't a practical question. Part A of the question, there was no practical application. Like in part B, you had to mention what are the audit risks. In part C, you had to do procedures. It was all practical. But part A is just theoretical knowledge. That's it. You're just telling why does the auditor need so and so information. It's just theoretical knowledge. It is part B, part C, and even part D, which I'm not doing here because I want to move to another question. It is these parts that are actually practical. Part A was very theoretical. So I hope you have gotten some tips, some tricks in night electronics, from night electronics. Now again, I'm going to randomly pick questions. Okay, now let me look at Magpie. Question number 203. Easy marks is to calculate ratios. And I think somebody even asked me to do some procedures on ratios. Who was that? Mariam. So we'll do procedures on ratios. But easiest marks is to do the ratios. I don't know. I haven't read this question. Do we have to calculate ratios? I'm not sure. But okay, you have ratios here: 54 days, 28 days, 149 days, 101 days. You see, in this question, part A of the question is theoretical. Why do we need an engagement letter? So if you've attended my classes, which nobody has, I have elaborated and explained about engagement letter. Engagement letter is basically a letter which outlines what is it that the auditor does. What is the scope of work? What are the limitations of the auditor? What are the responsibilities of the management? What are the responsibilities of the auditor? Who will do what? This letter is an engagement letter. For example, yesterday I hired a faculty and he will teach PM for my students. And I signed an engagement letter with him. That engagement letter basically said which papers he will handle, when will he handle those classes, how much will I pay him per hour. That is what is an engagement letter. That when you sign with an auditor, that is the engagement letter. So this is a very theoretical question. Magpie ka first part A is theory. Again, what is the objective of the engagement letter? Remember one more thing. If the examiner is asking for 4 items, please mention only 4 items. Do not act over smart. If the examiner asks for 4 items, stick to 4 items and end the story. You are wasting your time. It's only 4 marks. By sitting there and writing theory questions and trying to get, nobody will give you extra marks for extra points. You'll sit and write 10 points here. Even then, you'll get only 4 marks. But then you will not have time to do these 14 marks. 4 questions, 4 points asked, you will give only 4 points. End of story. Okay. Anyway, we've looked at what this. I have a habit to mention what I've done. I've looked at night electronics. Question number 202, which unfortunately we have taken about 2 hours, but I'm sure, I hope so. I don't know, I can't say I'm sure, but I hope so. It has been very helpful. Now we're going to look at Magpie, which is question number 203 from Kaplan. Okay, guys, stick to the tips and tricks I'm saying. I have got students who studied with me, audit and assurance. In fact, any ACCA papers, they've scored very, very well. So do take down my tips and tricks. These are tried and tested tips and tricks. We have a 4-hour marathon and I intend to take a break in between, that is at 6 o'clock. But I don't want to start a question and then take a break. I don't want a, loss of flow. So what I'm going to do is I'm going to take that much awaited break now itself. It's 5:53. I'm taking the break 7 minutes in advance because once I start Magpie, I want to be in the flow. I don't want to start Magpie, then give a break, then come back. So you can now take your break. You need not leave the meeting, stay in the meeting. In exactly 10 minutes, we will continue. Okay, thank you so much. Hi guys, welcome back. So let's now start Magpie. Can you just confirm that you are back and you can hear me? Just confirm that you're back and that you can hear me. Very good. Now, let's start Magpie. When we are doing Magpie, first part of the question, I think I will let you do it because it's a question which is theoretical. Okay. What is the second part? Using the table below, calculate the following two ratios for both years to assist you in planning the audit of Magpie. Payables payment period and operating profit margin. Operating profit formula is operating profit divided by revenue into 100. How much is the operating profit? I'll do for 2025. You can do it for 2024. Operating profit is 0.4 million divided by the revenue. How much was the revenue in 2025? 22 million into 100. So 0.4 million divided by 22 million into 100 is 0.4 million as in 400,000 divided by 22 million into 100 is 1.8%. Yes, it's 1.8%. Now, again, I've done the answer for 2005 operating profit is 1.8 million, but a lot of people mug this up as a formula. They don't really implement logic and sense, and they just kind of by heart. But the logic is, it's like, suppose you have written an exam out of 100. Obviously, out of 100, you want to know how much you scored, correct? You want to know what marks did you get out of 100. Similarly, when there is a revenue, out of that revenue of 22 million, you want to know how much out of that 22 million is your operating profit. So just like how you want to know how many marks did you get out of 100, same way you want to know how much operating profit did you have out of the total revenue. Therefore, the formula is operating profit divided by revenue into 100, which is 1.8%. I've done it for 2025. You can do it for 2024 on your own. Operating profit margin is 1.8%. 4.6%. Okay, very good. Next is payables days, payables payment period. So how do you calculate payables days? Payables days is how many days it takes you to pay your suppliers. Do you pay your supplier in 4 days, 10 days, 15 days, 60 days, 70 days? How much? So payables days formula will be payables divided by when will you have to pay? When you buy or when you sell? When do you have to pay? When you buy or when you sell? You have to pay when you buy. So the formula will be pay divided by purchases. And when will you have to pay? When will you have a payable? When you purchase on cash. Basically, you purchase and give cash immediately. Or when you purchase on credit, when will you have to pay? If you have paid cash immediately, you don't need to pay later, correct? So you will have payable when you make purchases on credit. Very good. And that's why the formula is payables divided by purchases on credit. And remember, we are calculating days. We're calculating very good. Mariam. Is going to be payables divided by purchases on credit into, whenever you calculate days or period, basically, for example, you're calculating payables payment period, you have to multiply with 365. So the payables are how much? Payables are 1.9 million divided by purchases on credit, which is taken as cost of sales basically. Here we are assuming that all the purchases, all the cost of sales is on credit. So divided by 10.9 million into 365. So 1.9 divided by 10.9 into 365 is how many days? 64 days. So your payables payment period is 64 days in 2024. Sorry, in 2025. You can calculate it for 2024 on your own. Do it for 2024 on your own entirely. Very good, Mariam. 64 days for 2025 and 81 days for 2024. You've done part B of the question also. Then part C, using the information provided and ratios calculated, describe 7 audit risks and explain the auditor's response. Now again, here I am using the difference between this question and the previous question is here you are using ratios to spot audit risks. First of all, let's calculate some general, just let's see if there are some general audit risks we're able to spot. Now again, remember, if you practice, you will be able to spot risks fast. For example, this is a new client. So you can literally just repeat what you said for Hercules. You can say, Magpie is a new client for us, Crow & Co. The audit team may not be familiar with Magpie's accounting policies, transactions, and balances. Because of our newness, there is an increased detection risk. So you see, if you learn even a few questions, if you practice, you will be way faster than others. Now, again, specifically, I'm going to worry about the ratios because in the previous question, I anyway taught you how to calculate, how to give audit risks. In this question, I'm specifically going to talk about ratios. See, in 2024, the receivables days were 101. And in 2025, the receivables days are 149. Right? And this is what you had asked for. So using ratios, we look at audit risk. See, first and foremost, what you need to mention is, again, that you have the ratio about receivables. See, you will include this and you will mention this. Okay. Again, I'm telling you how to spot what audit risk. You will need to mention the fact that the receivables days have increased from 101 to 149 days. Removing this. The receivables days have increased from 101 to 149 days. Also, the fact that the company has a number of corporate customers who buy goods on 90-day credit terms, and the level of receivables which are overdue for payment has increased from prior year. So that you will mention, because remember, as I said, you need to have your opening sentence. You will say the level of receivables from prior year has increased. This is the opening sentence. However, the problem is no increase has been made to allowance for receivables. See, receivables are going up, but we have not increased the allowance for receivables. Because of this, what is the danger? Again, this is the first part. You've mentioned the opening sentence. Second, you will mention what the problem is. The problem is there is a danger that customers may not pay and the receivable balance may not be recovered. Again, this is the problem, but we have to close the answer by actually mentioning how will it affect the financial statements. This will lead to the receivables being overstated in the financial statements and the allowance for receivables being understated. This will lead to the receivables being overstated in the financial statements and the allowance being understated. So you see, just like previously, I have mentioned 3 things, 3 points. Now that you've mentioned the 3 points, you can remove the points and you can make it as one. Now you read this, it will give you a powerful answer. You yourself will like reading your answer. The receivables days have increased from 101 to 149 days. The level of receivables from the prior year has also increased. Basically. No increase has been made. However, no increase has been made to allowance for receivables. There is a risk that customers may not pay and the receivables balance may not be recovered. This will lead to the receivables being overstated in the financial statements and the allowance being understated. Okay, so this is the audit risk with respect to receivables. Now, what is the auditor's response? As the auditor, you will discuss with the credit controller. So auditor's response will be to discuss with the credit controller the chance of recovering the overdue balances and carry out post-year-end cash receipts to see if out of that balance, how much amount has been received. To identify if the overdue balance have been properly cleared after the reporting date. Also, the fact that there is no increase in allowance for the receivables, we need to discuss this as well with the director. Discuss with the director the need to increase the allowance for receivables because the allowance for receivables has not been increased. Right? So look, whenever you put down audit risks, you need to for sure be in a position to put those 3 points: opening sentence, problem, and how will that problem affect the financial statements. I hope this is clear. Now I want to do one question on deficiencies because we haven't done anything on deficiencies. We use the ratio and we linked the ratio to the audit risk. Gross profit margin has increased from 2024 to 2025. Correct? You see, when it comes to ratios, all the ratios are kind of connected. For example, I know this is going back to your basic financial accounting, but when you sell something, suppose your sales are 100, your cost of sales are 20. So your gross profit is 80. Okay, your gross profit is how much? 80. Gross profit margin has increased, but from the gross profit, when you deduct admin and expenses, admin and distribution, say it's 10, you get the operating profit. Operating profit is say 70. Okay, this is how it normally is. Here, what is happening in this case is, see, gross profit is increasing. But from what we had calculated, operating profit margin, how much was the operating profit margin, Mariam? How much was it? 2004? I had calculated 2004. How much was my calculation? $4.6. And what about 2005? How much is it this year? 2005, I had calculated. Yes, it was 1.8%. So you see, again, Mariam, especially for you, because you had asked for ratios. See, what is happening is, in this question, operating profit margin has decreased, but the gross profit has increased. Gross profit has increased, but the operating profit margin has gone down. How is that possible? Maybe, okay, somebody might say admin and distribution expense maybe has increased this year. So the first thing is there is a discrepancy. It's moving in opposite directions. So the company's gross profit margin has increased from 44% to 50%. The company's gross profit margin has increased from 44% to 50%, but the operating profit margin has reduced. From 4.6% to 1.8%. See, this itself could mean issues. This is the first opening sentence we saw from the ratios. Again, it's going in different directions. So according to what I see, gross profit margin has increased, but operating profit has gone down. So maybe we made a mistake here. Maybe we missed some cost from cost of sales. Maybe there is a risk that some costs have not been included, or some costs are included in the wrong place. For example, maybe the cost of sales actually is 40. Maybe it is actually 40, but I did not include it, and that's why it's showing a high gross profit. So the risk is that there could be a danger that cost of sales is understated, and that's why we are showing a high increased gross profit. Cost of sales. So again, finally, you should say, how does it affect the financial statements? Cost of sales could be understated, or the other way is maybe cost of sales are correct. We have a high gross profit, but why is the operating profit going down? Operating profit is going down because maybe we have overstated some admin expenses, some operating expenses. So either cost of sales is understated or operating expenses are overstated in the financial statements. So this is how, Mariam, you will use ratios in order to give your answer. Basically, step one, what you will do is see if there is anything fishy, see if there is any discrepancy. For example, as I mentioned, the operating profit margin is dropping, but the gross profit margin is jumping so much. This itself is a matter of investigation. As the auditor, you know that there could be something wrong. There is a risk that some costs have been included, have not been included, maybe in the cost of sales. And that's why cost of sales is understated. Or some costs are included in the wrong place, maybe in the admin and distribution or operating expenses. Therefore, finally, you have to mention, how does that affect the financial statements? There could be a danger that costs of sales are understated or operating expenses are overstated. So this, again, now you can remove the points and you can put it as one answer. Now you read, the company's gross profit margin has increased from 44% to 50%, but the operating profit margin has reduced from 4.6% to 1.8%. This impresses the examiner because you are relating your answer very specifically to the client. There is a risk that some costs have not been included or some costs are included in the wrong place. Cost of sales could be understated or operating expenses are overstated. This is the audit risk. Guys, I hope this is clear. Now again, how do we, as the auditor, how do we respond? Our response to me is this. Look at, review a sample of operating expenses. Review a sample of operating expenses during the year to identify if any direct costs have been incorrectly classified as overhead expenditure. Basically, you are reviewing if any costs have been incorrectly classified as another type of cost, and that could lead to this discrepancy. Also, you can do an analytical procedure where you compare this year's cost of sales with last year's cost of sales to identify any major fluctuations. This year's operating expense with last year's operating expense to identify any major fluctuations, right? So this is how you answer. So again, do analytical procedures in order to identify major fluctuations. How many points are more than enough to mention? Good question. See, it depends on the ratios and the information given. Now, in this case, there is a clear mention of gross profit margin going up, but our operating profit margin going down. So definitely there should be a point about that. Similarly, another thing you can look at is receivables and revenue are interconnected. Revenue is going down, but receivables is going up. That itself could be a matter of concern. So again, how many points when it comes to ratios, there are a lot of points that you can look into, right? But we've already mentioned a procedure for receivables, wherein the receivables days have increased and there is no allowance for receivables. So when it comes to like the ratios, you need to make sure that you are sticking to the question and you are giving, look at the marks. How many marks and how many audit risks the examiner is asking. Because I can catch another at least 10 points easily. But as I mentioned in before the break, if there are 7 audit risks asked to be spotted, you spot 7 audit risks and you stop. Don't go on with 8th, 9th, 10th, 11th. It's not going to get you more marks. So, Mariam, have you gotten a sense of understanding of how to deal with ratio questions? Perfect. I hope everybody is able to make sense out of what I'm explaining. And I hope everybody is understanding and being benefited from this. Now I want to move to like deficiencies because that is also very commonly asked. Audit risk procedures with respect to trade receivables. Here, identify and explain 8 deficiencies in Silver Core's inventory count arrangements and provide a control recommendation to address each of these deficiencies. So yesterday I had done deficiencies. In the marathon yesterday, I talked about deficiencies. What are deficiencies? And I talked about what? Deficiency is basically where you mention to the client what is wrong, what will happen if you don't fix it, and how will it affect completely to the, for example, if you run, don't run. You can't say, oh, one deficiency is the child is running. No, you have to elaborate and say, child is running. What will happen if he runs? He will fall. What will happen if he falls? Teeth will break. So you need to mention till the end, how does that deficiency affect the client? So spotting the deficiency is not a very big deal. I feel anybody who has studied audit and assurance and taken classes should be in a position to spot deficiencies without fail. The problem is that you need to be able to communicate the deficiencies well. Right? So I'm going to look at 8 deficiencies in Silver Core's inventory count system. The company manufactures goods 24 hours a day, 7 days a week to meet customers' demands. Okay. Production will still be continuing during the inventory count as it is not possible for the company to stop producing goods. Movement of goods in and out of the factory and warehouse will also have to continue for operational reasons. Think about it. What will happen? I'll explain it to you from a logical point of view. Okay. One, two, three, four, 5, 6, 7, 8, 9, 10, 11. Now, in this box, I want you to count how many lines are there. Quickly. Count how many lines are there in this box. Count. $18. Akhil said 18. Somebody said 18. No, I saw 18. How come now I'm not able to see it? Akhil said 18. Now count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 20. Now, whoever counted and told 18, the problem is while you were counting, I was adding inventory, I was adding lines, and also I was removing lines. And that is a deficiency because you see your count became wrong. You told me 18, but there are 21 lines. That is a deficiency. So deficiency also you need to mention, there needs to be an opening sentence So the opening sentence will be movement of goods in and out of the factory. I'm just copy pasting. Will continue for operational reasons. Because of this, now you have experienced it when I drew the lines. There is a risk that the inventory count will be incorrect because goods are coming in and going out. There is a risk that inventory count will be incorrect as what is happening? We are not stopping the movement of goods. And because of that, you need to mention, as I said, when you talk about deficiencies, you need to tell till the end, how will it affect the client? There is a danger that we will double count or not count a piece of inventory. There is a risk as a result. There is a risk that we will double count or omit a piece of inventory. This is a deficiency. You understand? So deficiency is anything that is going to make a problem for the client. Will be a problem. It's a weakness in the controls. Now, what does the auditor recommend? Auditor's recommendation. Now, what I see in most answers is generic answers. What do I mean by generic answers? I get answers like, first of all, I get answers where the question has clearly mentioned it is not possible to stop the count. So I get answers like, stop the count. The question has told you that you cannot stop the count. So when you say stop the count, see, Mariam has told operation should be on hold. But the examiner is telling you they cannot hold. So that is why you lose marks. Just now, we said that we cannot stop operations. So as the auditor, you go and say, no, you have to stop the operations. You will not impress the client also, and you will not impress the examiner also. So please, in recommendation, don't say something which the examiner has said is not possible. Do not do that. See, Mariam, you did just that. Where the examiner has clearly mentioned that it is not possible to hold the operations, and then you say as a recommendation, hold the operations, it immediately shows a bad mark to the examiner, where it communicates to the examiner that you don't know what to do. First, don't give recommendations which the examiner has clearly mentioned is not possible. Point number 2. What is the second point? Don't give general answers. For example, any inventory going out should be kept in a separate place. Made sure we count. And only then it goes out. Which is a good recommendation. But you need to link the recommendation to the answer. For example, any pieces of inventory that is going out, make sure it goes in a certain place where the inventory area is being counted. Make sure that without it being counted, it should not go out. Same way, any inventory that is coming in, make sure it comes to a certain place. We keep it in a certain area. Only after we count it, it will go to the shelf. This is a good recommendation, but don't give general answers. Give it specific to the client. Look at the client's dates. For example, the good recommendation would be look at the date. The inventory count is 30th of September. So you have to include that in the answer and say any materials needed on 30th September. This immediately impresses the examiner because you are telling the examiner that you are giving a recommendation exclusively for silver co. You are not mugging up from the textbook and coming and giving recommendations. You are invested in the exam paper. You are giving recommendations specifically for this client. Any materials needed on 30th of September 2025 should be estimated and set aside and included within the work in progress valuation. Should be estimated and set aside and included within the work in progress valuation. For example, on that day, I need some raw material. I'm talking about raw material, okay? Suppose on that day, I need some raw material. I need to, before I take it out for putting it in progress, I need to ensure that we have estimated the amount and entered that amount in the work in progress. Secondly, again, Mariam, what did Mariam say? Mariam said we should stop the operations. But the examiner has clearly told it is not possible. So you can give a recommendation and say, since production, halting the production is not possible, the company should at least try to minimize the planned dispatches for the day of the count, which is 30th of September, for 30th of September. There are two ways you have impressed the examiner here. Two areas you have impressed the examiner. Give me 1 second, guys. Two areas you've impressed the examiner. First, you have clearly demonstrated that you have read the information. And again, you are invested in this specific client. You have not by-hearted from somewhere and come. You are all in for Silverco. You are the auditor of Silverco. So you are telling the examiner, look, I'm reading the question and I'm understanding what the problem is. So you clearly mentioned, since halting the production is not possible. So you've linked your answer, you've started your answer by telling what is the issue. The company should at least try to minimize the planned dispatches for 30th September. Again, the examiner will be like, why 30th September? Oh, because the inventory count is happening on that day. Again, you have demonstrated to the examiner that you are in a position to link your knowledge to that specific client, which is what gets marks in AA. This is exactly how people get good marks in AA. I've had students scoring even 90 plus, many of them. And all of them, what I made sure that they are very clear about is, look, the examiner does not see you as a student. The examiner literally has given you a client and you have to now act like an auditor for that client only. You are not going and writing the audit and assurance exam. You are going and doing procedures for recorder communications. You are going and spotting deficiencies for sycamore. You're going and taking audit risks for Venus. You're not going and writing the audit and assurance exam as a student. So you have to be specific to the client. Here in point number 2, I am specific to the client in 2 places. Goods that are dispatched. I mentioned this. I said any inventory going out should be separated. We will count it only and only then it is dispatched. Goods that are dispatched should be set aside and only should be dispatched after they have been excluded from the inventory. After we have taken a note of their exclusion. So we're sure that, okay, for example, if you are the auditor, you will give orders. Suppose you go for an inventory count, okay? You go to a supermarket and now we are going and we are counting inventory. You are the auditor as in the inspector, investigator, the powerful person. Everybody is counting the inventory. They're all scared of you and they're all counting the inventory. All these people are counting the inventory. They're all counting, you are observing them. There are certain procedures for this, right? You will make sure that nobody from the warehouse is there in counting. You need to make sure that there's no duplication. I don't want to get into that, but they're counting, okay? Any inventory that is going outside has to come to a certain area. Without your permission, no inventory should go out. It will come to this area only after we take a note, okay, this inventory is gone out. Only after you take a note of that, can the inventory be allowed to go out. Similarly, even coming in also the same case. So we need to ensure that we are excluding it from the inventory before inventory is dispatched. Similarly, even when you're getting items, it's the same thing. If you're getting any raw materials or finished goods from any outside source, it needs to be kept in a separate place. And it needs to be counted separately to make sure that we have counted it. I'm not putting that because it's just the opposite of this. So this is how you give recommendations. Mariam, you gave the wrong answer, but I hope now you are clear about these don'ts. Don't give the recommendation which the examiner has clearly mentioned is not possible. And don't give general answers like any inventory going out should be kept in a separate place, blah, 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 blah. Don't do that. Make sure that you are linking your answer to the client. So this is the first deficiency. Literally, we spent so much time in the first deficiency itself because I want you to understand the logic and the concept. Now, let's move on. The count will be undertaken by 20 teams of 2 counters from the warehouse. And the warehouse supervisor will be overseeing the count. This is such a big disaster. So pathetic.
It's 7 o'clock.
As an auditor, whenever you go for an inventory count, we know this as a matter of fact. I'm sure this was taught to you when you were doing audit and assurance, but ensure that before and see, the count should not be done by the responsible people. So now, when I said this in one of the class, when I said count should not be done by the responsible people. Again, you people are so nice. I got asked So are we talking about getting the count done by irresponsible people? I had a student ask me this question, I think some 4 years back. Should we find irresponsible people and give them the responsibility of counting? No, that's not what I mean. What I mean is, suppose we are counting the inventory in a supermarket. This is the supermarket, SM, supermarket. Now, the supermarket staff will be there, correct? 1, 2, 3. They should not be involved in counting the inventory. That is what I mean. See, they are responsible for the supermarket, but other people from other departments should come and count the inventory. Other people should come and count. Are you understanding? Other guys should come and count the inventory. So the minute you enter the supermarket as the auditor, you are in green. You will call this guy. He will be like, hey, you come here. Show me your ID card. He will show you his ID card and you will see that he is a staff of the supermarket. You will say, who asked you to come here? Why are you counting this? He will say, sorry, sir, I don't know. You will say, you are not you will not count this. You go out. Somebody else will count. Why? Is because only then we will know and we will be sure that the count is done properly. Otherwise, if this guy stole some inventory, he knows how much inventory he has stolen, correct? So he will count it in a way, he will count it and he will tell you the wrong count and in a way that he will not be caught for stealing. For example, there are 5 chocolates, 1, 2, 3, 4, 5. He knows that he already ate 1 chocolate. So there are actually only 4 chocolates. But when he counts and gives you the number, he will say there are 5 chocolates, so that nobody will catch him. I mean, not quite literally, but this is the objective, that other people should count the inventory. We need segregation of duties. And having said that, this is our last hour of the marathon. I don't know if you are enjoying the marathon. It's 4 hours, so it's a little difficult to enjoy the marathon. But again, I will give you a small 5-minute break. But before you go for the break, what I want you to do is type your feedback and your experience of the marathon in the chat box. How has this marathon been? Including, if you can include yesterday's session also. The tips, the tricks, all these things, your overall experience. Has it increased your understanding of the subject? If it has increased your understanding of the subject, how has it increased your understanding of the subject? If yes, how? I'm just giving you some examples about how you can give me your feedback. 2, has it given you clarity, rather tips and tricks, to frame answers better? So these are a few things you can use to put your feedback, because based on that, we will assess if we need to do something more, something else also. So do type it. You can be free. You can even send a private message directly so that others cannot read. So type it. We will continue from 7:10. Before you go, just type it. Again, you can put a private message. See, you have an option to put a private message. So you can put a direct message to me if you don't want others to read it. We will continue in 5 minutes. Tables, okay. So yes, I will share those details with you of how you can stay in touch and how we can help you. Thank you for your, I'm just typing it back to you privately. Others, if you haven't typed, please type again as cables, whatever your name is. Um, whatever questions you have, whatever you want to ask, you can. So I want to make sure that we are individually interacting as well. Whoever hasn't put their thoughts, questions, feedback, overall review, please make sure you do that. So, Brenna, also, if you have any questions, you can ask. Others, whatever thoughts, feedback, questions, whatever it is, you can put privately in the chat box. Guys, are you all here? Okay, Mariam. Any questions you can definitely ask. And again, I will respond to you as well. You can reach out to me there. Oh, Subarna, I'm just guys, I'm trying to reach out to you individually. So like anyone, anything you want to say, feedback, thoughts, questions, overall experience, anything. Anybody wanting to individually speak to me, whatever it is, go ahead. Section B, Mariam, again, procedures, deficiencies, what else? Audit risks. These three topics are awfully important. Very, very. Section A, definitely you have rules and regulations. A lot of questions are easy marks. Ethics, easy marks, simple marks. Okay, anybody, any questions? Ananya, Akhil, Rose, Subarana, anybody, feedback, thoughts, experience, questions, suggestions, everything open. See, there's no point just doing the marathon where I'm not able to interact with you. So anything you can type here in the chat box. I'll give you 2 more minutes and then we will continue. We will continue. We have some Valdo. Valdo, were you there in the beginning of the session where when we were dealing with audit risk and auditor's response, etc.? Subrana, well, by tomorrow, these recordings will be uploaded. Okay. Anyway, let us continue with what we're talking about. Right? We were looking at this. This is also a deficiency. The count will be undertaken by 20 teams of 2 counters from the warehouse itself, and the warehouse supervisor will be overseeing the inventory count. That is a deficiency without fail. Right? Definitely that is a deficiency. Again, Valdo, I'll come to your question, but I don't think you were there when we were talking about audit risk and all that, because this is like foundationally, I feel like if you have a question like that, we need to go back to the foundations, the basics, which I will, but let me complete this. So what are we saying? We're saying that, again, mention the point. The point is the deficiencies, the count will be undertaken by 20 teams of 2 counters from the same warehouse and will be overseen by the warehouse supervisor. Now, again, if you mention this, you will not get your mark. You need to mention that this leads to a lack of segregation of duties. Meaning that the same people who are working in the warehouse are counting the inventory in the warehouse. And these counters are not independent. What do I mean by are not independent? They are the ones who are overseeing the inventory. If they steal and they are the ones who are counting, again, it is a problem. So this leads to a lack of segregation of duties, and these counters are not independent. Again, you need to say ultimately, when you talk about the deficiency, you need to ultimately talk about how will that affect the client. So you will need to mention and say this, they could deliberately, purposely conceal fraud and error. As I mentioned, I gave you the example of the chocolates. If Shamu ate one chocolate, he will purposely try to hide it because so the counter should be some outside person. I'm not saying some outside person as in somebody who is not an employee of the company, but it should be someone from another department. So this is how you will give your deficiency answer. You need to go till the very end and tell what will be the problem. So what is the recommendation? There should be a different department involved in the inventory count. I mentioned this. I gave the drawing also, and I said, when I drew and I said, the red people will come and count. Not the people who are working here. The outside people from other departments will come and count. So there should be a different department involved in the inventory count. Why? To ensure that there is segregation of duties. Now coming to Valdo's question. And the question is, how to clearly differentiate between auditor's response to a risk and auditor's recommendation of internal control. The question itself has the answer. See, when it comes to auditor's response to a risk, here the auditor will take some action to deal with that risk. For example, go back to the first question. You spotted audit risks. One risk was what? One risk was that this is a new client. So we said we will send experienced people. We said that we will do more procedures for opening balances. So when you're talking about audit risk and auditor's response to the risk, that is something which you as the auditor will do. These are the actions the auditor will take. You understand? But when you give a recommendation, it is not something the auditor will do it, but it is a suggestion or an advice to the client. For example, here, since halting the production is not possible, the company should at least try to minimize the planned dispatch for 30th September. I'm as an auditor, I am not doing it. I am advising the company, you minimize your dispatched items should be set aside and counted before going out of the warehouse. So the major difference is, in case of audit risk, again, I can keep this answer in this question side by side so you're able to see the difference. Again, when I said that the client is new, and when we gave the auditor's audit risk and the auditor's response, we were looking at what the auditor will do. The audit firm will send more suitably experienced people. The audit firm will do more procedures for opening balances. When we said that, for example, William Knight has all the reasons to manipulate the figures in the financial statements, we said, the auditor has to be more, he needs to maintain more professional skepticism. We didn't tell that to the client and say, you have to keep professional skepticism. So when it comes to audit risk and auditor's response, the first major difference, which unfortunately, again, 2 weeks before the exam, you are witness. There are questions like this. So audit risk and auditor's response. Auditor's response is the actions the auditor will take. For example, send a suitably experienced audit team. Ensure that we have professional skepticism. We, not the client. Okay. Recalculate certain numbers. Who will do it? We, not the client. But when it comes to deficiency, these are deficiencies in the client's systems and controls, and it is the client who should fix it. We are only advising them as to how to fix it. So audit risk, auditor's response, these are the actions that the auditor will take in order to deal with the audit risk. But when it comes to recommendation for a deficiency, these are deficiencies which the client has. these are suggestions or advice the auditor gives to the client. So the way you word it itself will be different. For example, what did I say? There should be different departments included in the inventory count. Meaning, we are advising this to the client. See, look at the difference, Waldo. There, what did we say in audit risk? What did I say when we said that there is a new client? I said, our words was not we should, there should be, you should. That was not our words. Our words were, we have to send a suitably experienced team. We have to do more procedures. But in this case, when it comes to a recommendation, what am I saying? There should be means from where will it come? Who will do it? Client will do it. For example, management is advised to do so. Or the company should consider to do so. You understand? So the best way to differentiate between the two is know the differences between the roles. In case of an auditor's response, this is what the auditor will do or the audit team will do. In case of recommendation, it is what we are advising them to do. I'll give you one more example. Here, this William Knight. What did we say? We have to properly ensure that we have professional skepticism. We also have to thoroughly check the what should we check? Again, I'm using layman terms now because we've already done this. But we have to thoroughly check for any overstatement of revenues. Who will do that? Not the client. We will do it because it's the risk to our audit. But here, when you give recommendation, should be set aside. As in, at the client's place, we're advising the client to keep things aside. So when it comes to audit response, we are doing audit in action. Do this. Right? Again, what is the idea also? Now the next point would be, so first is knowing the roles and responsibilities. Audit response is what the auditor should do to mitigate that risk. Deficiency is what the auditor advises the client to fix. The second thing is objective. In case of auditor's response, see, auditor is always there to gather sufficient appropriate evidence in order to give his opinion on whether the financial statements are true and fair. His objective is gather sufficient appropriate evidence to give an opinion on whether the financial statements are true and fair. And if there is any risk to the trueness and fairness of the financial statements, that risk is the audit risk. auditor's response will be what? To do some actions to ensure that that risk is brought down. But when it comes to recommendations and deficiencies, these are things within the client's internal systems. It has nothing to do with it really has nothing to do with it. Yes, it could. But the major thing here is it is affecting the client's controls. So in case of a deficiency, this is something that affects the client's controls. As I started, I said, either it is failing to prevent or catch fraud or error. Deficiency in the controls. And generally speaking, audit response will be taken care of by the external auditor. Normally speaking, it is the external auditor who will do the auditing of the financial statements. We all know this. And the external auditor, after the audit of the financial statements, whenever he sees that there are so and so risks to his audit, for example, this was a new client, so there may be more work to do. So generally it is done by the external auditor. But when it comes to deficiency, we saw this yesterday also, Waldo. I don't know if you were there yesterday. But when we see deficiencies, it is very importantly a job of the internal auditor. Yes, external auditor will give his recommendations, but majorly is the responsibility of the internal auditor to ensure that the controls are strong. External auditor will give recommendations, yes, no doubt about it, but it is majorly under the scope of work of the internal auditor who will check the controls, and any deficiencies, he gives his recommendations. So even within audit also, who does what? The audit response would be given by the external auditor. But when it comes to the deficiencies, it is tested, controls are tested more by the internal auditor, and those deficiencies, whatever they are mentioned by the internal auditor, and he will give recommendations to fix it. Again, when the external auditor does that, he only advises the client. So it is completely two different set of exercises altogether. The objective itself is different. So Waldo, for you to be able to separate the two, you need to know separately what is the audit risk issue. The audit risk issue is that there would be a mistake in the financial statements. So the auditor does certain things to bring that down, which is the auditor's response. But when it comes to deficiencies, we're not necessarily and directly talking about a danger to the financial statements. We're talking about the controls being weak. And our objective is to improvise on those controls. So our advice is talking on how to improvise those controls. Okay, but I would definitely recommend that you watch this marathon, today's and yesterday's in full, because I've done some topics in these 8 hours. So I'm sure it will definitely help you further. Okay. Going back to deficiencies. Waldo, you've done self-study or you've gone somewhere and studied? What is that question? even Mariam, I hope you are clear. Mariam is not there. But again, please don't, when it comes to deficiencies, please do not give a recommendation which the examiner has clearly mentioned that it's not possible. Don't do that. Again, unfortunately, I don't know, even people who have studied in institutes, they come back and they give answers where clearly the examiner has told you not possible. Do not give those recommendations. Okay. Now, from the textbook, I want to know if there are any specific areas which you people haven't been understanding well, haven't thought well. If there are any specifics, let me know, and I will talk you through that conceptually also. If there is any problem in any specific area of the textbook, I will help you improvise and strengthen your concept. So last few minutes, I'm open on public demand, as in it will be based on your choice. If you want me to open a specific topic and explain that, so that your understanding of that topic becomes stronger. Because as much as practice is important, you need to understand the mind of the examiner. What does the examiner want? But before you understand somebody else's mind, you need to make sure that in your mind, you are clear on the concepts. So as of now, I'm going to keep it open. The floor is open. You can ask me to go to any specific topic in the textbook, and you can ask me to run you through that. Any topic you didn't understand when you did self-study, or you did not understand when you went to your institute, any specific topic of that sort, let me know. I'll jump to that topic and support you in that. Akhil, key audit matters. You're talking about the last two chapters. You're talking about chapter 11 and 12. Am I right, Akhil? Key audit matters and opinions. Yes. I will come to that, I will. But Akhil, when you're talking about key audit matters, I think we're talking about the 12th chapter. See, first of all, you want guidance on opinions, correct? What do I mean by opinions? In simple layman terms, after the audit is over, you have to give your opinion on the financial statements, right? That is why you are hired. So I always tell my students, my full batch students also, I've told them this multiple times. Right now, nobody wants your opinion. But once you become an auditor, you are paid to give your opinion, right? So once you have studied the financial statements, studied as in audited the financial statements, you will do all the procedures, you will do everything. You will do first, you will do planning, then you will do all the procedures, you will do this. Then finally, once you have assessed the financial statements and you realize that the financial statements are true and fair, you need to give this opinion to the shareholders or owners who hired you for this work. Right? So what happens? You have to give your opinion. Now, I will give you an analogy to understand this. But imagine, I gave the same analogy in my regular class also. Imagine you are going with your friend, and your friend is planning to buy a house. Your friend is planning to buy a house. Now, obviously, when you are going with the intention that the house is good, and you go with the intention to tell your friend, "Ke chalo, the house is good, go ahead and buy the house." This is your intention, correct? So, if the house is good, you go and see the house, and the house is nice. Then what happens? There is no change in plan. Meaning, he will go ahead and buy the house. You like the house. Meaning that there is no modification. It is unmodified, as in the opinion is unmodified, as in you went there in the first place with the mindset that, okay, my friend is buying this house. He will buy this house very soon. Most likely the house will be good and he will buy it. That is what you went, that is the opinion you went with. When you actually go to the house and see the house and the house is nice, your opinion doesn't change. Your opinion stays unmodified. The house is good. Go ahead and buy the house. But suppose you go to the house, and the house is very bad. So now actually, why did you go? You went with your friend with the intention of telling him that, okay, buy this house. It's good. But now you go there and you see that the house is actually bad. So now you have to change your opinion. See, when you are going to see a house, you will not go there with the opinion that, oh, the house will be bad. You are going there, it means that your opinion is good about the house. That's why you're going and seeing, no? But after going, you see and realize that the house is bad, meaning you will change your opinion. You will modify the opinion. The house is bad. Similarly, when it comes to the financial statements also, if the financial statements are true and fair, it means what? It means you will give an opinion which is unmodified. But if there is a problem, if there is a misstatement in the financial statement, you will give a modified opinion. Maybe there is a problem. Maybe there is a major misstatement. Right? So unmodified opinion, the unmodified opinion is given when they conclude that the financial statements are prepared in all material respects in accordance with the applicable reporting framework. Everything is good, everything is reasonable, all the accounting policies are disclosed properly, blah, 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 everything is good. You will give a modified opinion when there is something or the other that is wrong. Either there is a material misstatement throughout the financial statements, or there is a material misstatement in one part of the financial statements, or maybe you did not get proper, sufficient, appropriate evidence, in which case you will not give an opinion at all. Akhil, I hope the difference between unmodified and modified is clear. Now, looking at key audit matters, again, due to the shortage of time, I am running through the important things, as in directly what you are asked. In my class, I had elaborated in this in a lot of detail. But what are key audit matters? See, while doing audits, there were certain things that were big, that were risky, that were tricky for the audit. Those matters the auditor highlights because either they were big or they were risky or they were tricky. The auditor feels that those were key matters during the audit. Those matters were key during the audit. Why? Because they were big, they were risky, or they were tricky. These matters the auditor specifically highlights so that the shareholders and the users of the report are aware that, okay, while the audit was done, these are the things that were biggest, riskiest, trickiest matters. These matters are separately highlighted by the auditor under the key audit matters section. For example, goodwill. Estimating goodwill is not easy. Goodwill, putting a number to goodwill is not easy. If you've done your FR, you will know this even better. This is something that was a little tricky for the auditor to check, to assess. So all those big, risky, tricky areas come under the key audit matters section. It's like you go on a trip. Everything was good, car was nice. Okay. All friends came on time. But on the way, there is a diversion which is confusing. Then what happened? No traffic on the road, everything was okay. Here, the trickiest part for you in this trip was on the way there was a diversion which was confusing and you don't know which direction to take. So what you will do is you will say, in my trip, the matter that was very critical, that was very risky, that was big, that I'm separately highlighting to my friends and saying, oh, you know, this was some issue. So, Akhil, are you clear about what key audit matter is? Like, again, I'm not going in details, but I've given an example also, and I've used some simple layman terms also to explain what it is. These are those matters which, according to the auditor, as per the auditor's judgment, were most significant, which we are now communicating to the users under the section of key audit matters. All right, let's go through it. Guys, apologies. I was talking for the past 1 minute and realized I. So I was saying that let's keep this as the last topic for the day, where we are looking at ethical. I think this is IOMITE's question. Threats and safeguards. First of all, what is a threat? For example, you are going out on a bike. The threat is that you might fall. That is the threat. Safeguard is anything that eliminates the threat or at least brings down the level of threat. Right? So safeguard is, in this case, safeguard is a helmet. So a helmet is something that is definitely bringing down the level of threat that you might get an injury. Now, Iomide, your question, to answer your question. See, whenever you go through a question, and where if you want full marks, again, you need to put things in points. What do I mean by that? Is identify what the threat is and mention what kind of threat it could be. Oh, sorry, or rather, let me put it as mention the threat and highlight what kind of threat it is. For example, if the question says that the auditor has not been paid from a long time, or the auditor hasn't been paid, or say the client has financial issues and is struggling to pay its staff. One threat is the fact, you mentioned the fact that the client is having financial difficulties and is not able to pay. This could lead to what? It could lead to a self-interest threat for the auditor. The auditor may act in the best. Again, guys, I'm explaining all this assuming 100% prior knowledge. Because again, we are like 14 days away from the exam. So I'm not getting into the basics. I'm just trying to answer your question, I am right. But you mentioned the threat. Okay, the client is having problems in paying the staff, including the auditor. And then you have to highlight what kind of threat will it lead to. It will lead to a self-interest threat.
It's 8 o'clock.
The auditor is now likely to work as per the client because the auditor has his own self-interest for receiving his fees. You understand? Then explain why it is a threat. You've mentioned the threat and you've highlighted what kind of threat it is. Okay, it is a self-interest threat. Then, as I mentioned, you need to explain why it is a threat. Okay, it is a threat because, again, what happens? The auditor's independence is compromised. Now, for the sake of his money, again, his independence is compromised. He might be tempted to blah, blah. Then as a third thing, you suggest appropriate safeguards. How do you minimize? Again, one safeguard which your textbook has looked at always when it comes to fee dependency is you need to have multiple clients and not rely on one big client. There are numbers on that also, which you would have learned. All right. For example, if it says that the audit firm also gives some other services, and again it's there in the textbook also, like some taxation and those under self review it is there. Tax services, it will come as a self review threat. So suppose the question says the audit firm also gives some other services like tax services to the client, immediately that is a threat. So what will you mention? You will mention what the issue is. The order you will write. You will say the audit firm also gives some other services to the client. This leads to this could lead to a self-review threat. Again, I'm explaining, assuming full prior knowledge of the topic. Okay, I'm not explaining what self-review threat is, how giving other services to the client leads to self-review, all that I did in my classes. Here, I'm just trying to answer your question. So you mentioned this leads to a self-review threat. Why? You need, as the second part, you need to say, this leads to a self-review threat as the auditor may be required to audit their own work. Then you suggest appropriate safeguards. You will say the engagement team will not undertake work that will be subject to audit. A different firm can do it. Now, once you've put these 3 points, you remove the points and you give it as one powerful answer. The audit firm also gives some other services to the client. This could lead to a self-review threat as the auditor. This could lead, and you can remove the full stop also. Self-review threat as the auditor may be required to audit their own work. The engagement team will not undertake the work. The safeguard is the engagement team should not undertake work that will be subject to audit. Okay, so if you want good answers for ethics, you need to definitely mention what is the threat, which type of threat it is, how is that threat going to create a problem, and then basically explain why it's a threat, and then suggest appropriate safeguards. All right, Iomide, is that clear? All right, that brings me to the end of this marathon. I've given my number. The ones who've taken it down can reach out to me. I've also shared my name. You can reach out to me on LinkedIn, connect with me. We can stay in touch. But I hope you've enjoyed this marathon session. We covered all the core areas, all the important areas. We looked at how to answer. I gave you, yesterday, I covered all the core areas, the areas where most Section B questions are asked from. Today, I gave you tips and tricks as to how to answer exam standard questions, how to answer exam standard questions. I gave you tips as to how to impress the examiner. Keep those tips and tricks in mind. You still have time. It's just 18th. You still have about 2 weeks for your exam. There's still time. Keep those tips, keep those tricks, keep those suggestions in mind, and keep practicing. And I'm sure that your exam will. Okay, thank you so much, guys. You can. Thank you.